What's up, everyone? It's Karthik with MoneyVest. Welcome on board for our Market Open live stream. Today is the day. We've got some very important events. FOMC meeting takes place, and the conclusion of that meeting with the statement released at 2 p.m. Eastern. I will be live again later in the day. And of course, we also have the 2:30 p.m. press conference from Jerome Powell as well. Markets, of course, pushing higher. QQQs are up over 36 basis points right now. We got the S&P 500 up over 21 basis points, with Nvidia pushing up over 3.4, almost 3.5% pre-market to a brand new all-time high. We're looking at Nvidia sitting at over $5 trillion in market cap. SoFi is right now just down about 1% pre-market. We got Palantir up over 74 basis points, and Tesla also pushing higher to 460s right now pre-market as well. So brace yourselves, as this is going to be quite an interesting day. We got volatility sitting at just over 16. We've got the FOMC and the earnings scheduled to come out. A lot of companies have already reported. So if you come over to the earnings calendar, we've already had companies like Caterpillar report, Boeing reporting negative $7.47 in earnings per share, with over $23 billion of revenue. Caterpillar coming in with a double beat here, just shy of $5 in earnings per share, with over $17.6 billion of revenue. Booking Holdings, double beat yesterday, over $9 billion of revenue, and just shy of $100 in earnings per share, with Visa also coming in with their numbers. It's slightly down about 1% at the moment. Looks like they did have a double beat on revenue and EPS as well. Sometimes the consensus are different among different platforms, so the data provider that we have will most likely have something different in terms of the consensus expectations, and TradingView might have different numbers as well. So yes, it does show a double beat on Visa. On our platform, it does show a miss on the company, but the numbers, of course, are going to be exact. $10.72 billion of revenue with $2.98 in earnings per share. CVS double beat here. We got Pfizer V reporting at $4.92 billion of revenue and just over $2 in earnings per share. Looks like a bit of a double miss for the company. And of course, later today, we got Microsoft, Google, Meta Platforms, ServiceNow, Clack Corporation, and Mercado Libre. So lots of heavy hitters and big names reporting their earnings today. So the audio and the video is good. Just give me a thumbs up. I just want to make sure there are no technical issues. And once again, welcome on board, everybody. Thank you so much for joining. And of course, this is going to be the portfolio right now. The options portfolio sitting at a brand new all-time high yet again. I feel like I'm saying this almost every day as the portfolio continues to increase on the back of Nvidia. We got Iron, we got Oscar, Palantir, SoFi, Tesla, Hims and Hers. You got Ethereum, BITX, a little bit of crypto exposure as well. And this portfolio is up almost 7,000 on the day, about $136,000 of open P&L for this portfolio as well. So that's where we are. We're going to take a look at some individual stocks as well. Today, we also have the Trump and Xi Jinping's meeting. So that's going to take place. FOMC is going to take place. And we've got a lot of Magnificent Seven companies reporting earnings. So today is a very big day for the market, to say the least. Looking for an emotional support group for FI bag holders. Yes, so Pfizer V selling off, I think, quite aggressively here. Pre-market. Wow. What? 40% decline here for the stock. $2 in earnings per share. Revenues coming in also with a miss at $4.92 billion, and that is a massive gap down for Pfizer V. Absolutely insane. Wow. Well, Akash, I hope you were not holding too much of this stock in the portfolio, but I think Xi Jinping and I think it might be Thursday. 5 things Beijing wants from Trump-Xi meeting. Yep, so it might be Thursday, yeah. So today we've got the FOMC and, of course, the big tech earnings. And the suspense is building up ahead of Thursday's meeting between U.S. President Donald Trump and Chinese President Xi Jinping in South Korea. As both sides look to resolve escalating bilateral tensions, as Trump was on his way to South Korea for the final leg of his 3-nation Asia tour And he said he looked forward to a great meeting with President Xi of China, and a lot of problems are going to be solved. The relationship with China is very good, is what Trump mentioned. And also they're going to be talking about NVIDIA as well. Tariff reduction is going to be, of course, very, very front and center. What kind of trade deals are going to be struck between these two giants? Stability between these two countries is also very important. Export controls for rare earth minerals, metals, and of course for semiconductors, and tech easing, trade with other countries. How are they going to structure those? And of course, having some mutual respect between those two countries so that they can actually have a win-win negotiations as well. So maybe do a CSP on it. Joe says, yeah, I mean, that stock is just absolutely getting crushed pre-market right now, 38%. That's going to take it back to COVID lows. Literally, this is 5 years worth of gains evaporating. Since the beginning of this year, the stock is now officially going to be down 2/3, 67% after this sell-off as well. And that is brutal. What a drop on Pfizer vape. So yeah, so that's where we are. Let's come back to NVIDIA. Happy thoughts. A new all-time high coming in, $208 is where we are pre-market. And given the all-time high and 4.9 trillion market cap, and if you were to just multiply this number, 4.9 multiplied by 1.0352, we're looking at a market cap of just shy of 5.08 trillion. So about 5.1, close to 5.1 is where we're going to be opening for NVIDIA for the first time ever, for the world to see a company valued at $5 trillion, bigger than a lot of countries, right? Bigger than most countries in the world is your NVIDIA. So yeah, face ripper day ahead for sure. And again, one more thing I will point out is that this has been a very, very concentrated rally as well. I mean, if you come take a look at the market concentration, obviously we had $116 billion worth of inflows, but take a look at big three. Just the top three stocks are making up over 20%. So a fifth of the entire S&P 500 is made up of just three companies, three names, right? So what is that in percentage terms? 3 divided by 500, we're looking at about 0.6%. So a fifth of the S&P 500's concentration is in less than 1% of the S&P 500. That is next level concentration. And then, of course, if you come over to the market snapshot, this was also pretty evident and clear. There was a lot of liquidity flooding out of industrials, energy, utilities, healthcare, real estate, defensives, financial services. Materials was basically flat. But this side of the heat map all looks red. It's all red. And where is it going to? Well, semis, right? Semiconductors, 1.5% was up the most, and you can see how many sectors actually closed red yesterday. And it's within that sector also, it's not that everything was green. I mean, AMD was down, Lam Research was down, Qualcomm was down, Applied Materials was down, Clack Corporation was down. Analog Devices, we got Texas Instruments. It was really NVIDIA, Broadcom, Intel, those three getting a lot of liquidity. Cybersecurity, we had CrowdStrike pushing up. Microsoft was up on the recapitalization, news for the OpenAI. And then, of course, some other names, Palantir forming a partnership with NVIDIA, pushing up pre-market, getting back up to over 191. Department of Energy partnering up with NVIDIA. They had the GTC event about an hour and a half. Jensen Huang unveiling the next big thing for NVIDIA's future. And once again, it's one of those things, right? NVIDIA's event comes out and it sucks all the liquidity out of other sectors and stocks and pushes up. So are you able to do an analysis on a stock, Toby? Yeah, absolutely. Whatever stock it is that you want me to go over, I'm happy to. Usually, if you don't spend too much time going over to the fundamentals, we do a very quick technical analysis on that stock. And fundamentals, I can briefly look at it, but we obviously can't spend too much time diving deep into the fundamentals of the business, right? So that becomes more time consuming. And as a result, we can do very quick technical analysis. Is Palantir a buy now since they partner with NVIDIA? Waiting for a pullback, but looks like it will never happen. Roshan is asking. So Palantir, again, it's trading at a very expensive valuation. Depends on where your cost basis is, where you are, currently placed with Palantir. If this is your first time buying Palantir stock, I would be very careful, because I would avoid here at these levels for Palantir. But if you've already got a position in place and you've already got a position built in, then in that case, it's okay to dollar cost average a little bit more because this partnership is going to open more doors for Palantir long term. So it really depends, what your time horizon or objective is and where you're currently at with a Palantir stock. For example, me, I did pick up a little bit in the 170s, not last Friday, but the Friday before, sent out a small order to start a position in the options portfolio. In the long term, already got shares from 20s, 30s, so not really touching those. But from a options perspective, I really do want to get up to about 100 shares over the midterm here so I can start selling some calls on Palantir in the options portfolio. So any kind of dips and corrections that we do see, I will be looking at picking up more shares of Palantir in and around those levels. Amazon pumping here. So let's take a very quick look at Amazon. Where are we at? Pushing up 1.5%. So very nice. Resistance all the way up to 235, 236. So this right here is going to be that level to watch for Amazon. And again, a lot of consolidation sideways. So of course, we've been in that range for quite some time. And we also did point to the fact that this is a very nice area of accumulation from 210 to 211. It is up 9.5%, close to 10% from those levels. Okay, yes, Toby, ticker symbol FI. We were talking about that earlier. Pfizer V, went over the earnings a little bit earlier on that stock. And, it is a pretty brutal drop. And we've got a support down at $73 now for Pfizer V. Are we going to see some buyers to step in? Possibly, given the massive gap down here. But we did get a pretty strong earnings miss from the company, about a 22-23% miss for the business. And sliding towards the worst day ever as Outlook reset is called difficult to comprehend. So sells off, offering the banks and merchant service, including payment processing, and slashed its outlook on Wednesday to a degree that one analyst said was difficult to comprehend. So guidance cut and a double miss is one of the reasons why it's down over 38% now. Pre-market, it could become S&P 500's worst year-to-date performer if current losses hold, and the pre-market level would translate to a 58% decline on a year-to-date basis. So it could become the worst performing S&P 500 stock here. Our current performance is not where we want it to be, nor where our stakeholders expect it to be, is what the CEO Mike Leons said. And he announced a new action plan for the company to capitalize on the rapidly evolving finance and e-commerce landscape, putting the company in a better position to drive sustainable, high-quality growth and reach our full potential. The action plan includes items like fostering operational excellence and enabled by AI. So, yeah, it's not looking good with the guidance cut and a double miss here. I'm sure there's going to be a lot of downgrades from analysts over the next couple days here on Pfizer V. So, what is the deal with NVIDIA and Nokia? I think NVIDIA is investing about $1 billion in Nokia, right? If I'm not mistaken. Last I checked, pushing higher 22%. So if you go over to, there we go. So the Finnish group gained about 20% or over $7 billion after a chip giant unveiled a $1 billion investment, but the partnership is not exclusive and will focus largely on futuristic mobile networks, not in-demand data center kits. For stakeholders, the near-term benefits are murky at best. So on October 28th, announced that they're going to be investing about $1 billion equity investment into Nokia via the purchase of new shares at a price of $6 each. NVIDIA is just making money on their investments. That's what they're doing, investing in CoreWeave, investing in Nokia, investing in so many other businesses that then rally on this news, and they're already making very smart investments. And, NVIDIA's got a problem of plenty. They've got a lot of cash sitting, and so they just don't know what to do with it. So they're just picking up shares and equity into these companies. So, that's one way to make money for NVIDIA, of course. Good morning, Caddy. What's going on with Hood and their cover calls? They're very lucrative. Yeah, if the stock is trading at all-time highs and it continues to push higher, then covered call premiums definitely jump and they become very, very lucrative. So Robinhood, we got a resistance up to as much as 154, 153. So that right there is going to be that level with a support level roughly around 120 for Robinhood. With volatility today, hope Jay Powell gives me a good dip to buy. Yeah, I mean, we'll see if further rate cuts is going to drive this market higher, or if we are going to see some kind of a pullback or sell the news type event for the market. So let's take a look at Boeing here very quickly, because Boeing earnings are also out. They came out earlier today. Looks like a very strong miss on EPS. Revenues 5.5% higher than what was expected, $23.2 billion. The stock is slightly down pre-market. And what I would say is that this is a lower high and lower low pattern right now for Boeing. So we are in a bit of a downtrend with a very strong support that's going to stay put right there at 210, 211 for Boeing. So very strong support there. And of course, a resistance all the way up to as much as 225, 226. That's exactly where it's getting rejected right now pre-market. Okay, so FI we went over, Boeing we went over, Robinhood we went over. How come no one talks about TSMC? They are there with NVIDIA, but not as overvalued. TSMC is great. We've been talking about TSMC for a long time. Yeah, I mean, it's an all-time high. Very, very strong company. There's three companies in the semiconductor and chips. I guess I would call it like more than three, because there's obviously a lot of players in semiconductors, which is one of the reasons why I do, very much like SMH, because it covers the entire landscape of semiconductors, includes all of them. But if I were to really boil it down to like a few, I would say NVIDIA, TSMC, ASML, AMD, and I would even put Cadence Design Systems in the same bracket, that are essential and very, very important for these semiconductors. So, those are the ones that are high conviction names, possibly even a few more, because without them, the entire ecosystem comes to a halt, right? They are doing things that nobody else can do. And so this is my entire semiconductor watch list. So you've got NVIDIA, Broadcom in there, TSMC is part of it. Of course, we've had many other names that are incredibly well organized, well managed companies that have great potential. I mean, Micron, we got Lam Research, Texas Instruments, Applied Materials, On Semi, TSMC is part of that. So almost all of them are incredible companies, and that's why SMH is one of my favorite ETFs to buy and hold for the long term. Okay, PayPal, what are your projections here, Lokesh? So kind of hard to say. I mean, yesterday we were expecting a red candle, which we did get. Obviously selling right back down after a very strong, momentum up to $79, $80. Sellers stepping in, bringing us right back down here, up almost 4%. So, in the morning live stream, I did mention we could have a green day and a red candle after the huge gap up. And it was incredibly volatile. I mean, if you come over to PayPal's price action, it was very, very volatile yesterday, right? So what really happened was, pre-market, it was pumping, it was pushing higher. As soon as the market opens, sold off, and then rallied right back, and then sold off rest of the day. So it was all over the place. It was fluctuating back and forth and very, very volatile to eventually close still higher on the day, but with a red candle. Definitely suggesting some profit taking. Support level is going to stay put at $64, $65 for PayPal. So, okay, with volatility today, yep, hope Jay Powell gives us some good deals. My above Oscar questions would be my first options trade. Okay, let's see. Where do we have that question, Rakesh? Oh, if I was looking at selling an Oscar put expiring 28th November, strike 16 with a premium of $80, would you think this is okay? I think it really comes down to doing the math, right? I mean, what is the math here? We're looking at 1 month out, so 30 days, $16. That's $1,600 is what you would have to set aside as collateral, and you're getting paid $80 in premiums. So 80 divided by 1,600, and that is a ROI of 5%. So I would say it's a pretty good return on collateral for 30 days, right? So annualized multiplied by 12, that's 60% annualized. So yeah, I would say it's a pretty good return on collateral. Just be mindful that, if it does drop to $16, be ready to accumulate and buy in and around those prices. And the delta, I'm sure, is going to be closer to 25-30 for that put on Oscar if the return on collateral is indeed close to 5%. So we're looking at 28 November, so 30 days out, $16 is paying you 70 cents. Scroll back, 20 delta. That's exactly what it is, right? So 20 delta paying you about 5%. It's pretty good return, I would say. So I like it. Okay, let's see. Let's come back. Palantir signed a letter of intent with the Polish Ministry of National Defense. This is great news for Poland and Palantir as well. He has a deal with Poland also coming in for Palantir. Pre-market, it is up over 73, 74 basis points. So not a huge amount, but still, pushing higher to almost new all-time highs. And we are very close to $450 billion of market cap here for the company. So, okay, let's take a look. Yeah, Pfizer redestroyed. I think SMH and SOX will double as long as chips keep outperforming. Yeah, the key word there is as long as chips keep outperforming, right? It's like saying the markets will keep going up as long as the market keeps going up, right? So a lot of that is contingent on the underlying factor that you just pointed out, is that if chips keep growing. And so, yeah, I'm very bullish and optimistic on semis, cybersecurity, data centers, cloud, robotics, AI, tech, and growth. I mean, those are the main industries, main themes that we've talked about on the channel. It's been a very, very tech-focused analysis over the last 5 years. Every single market update includes for some of the heavy hitters. We talk about NVIDIA, AMD, Meta Platforms, Tesla, Google, Microsoft. We got Apple, SoFi, Palantir. All these businesses, right, are literally leading, right? They're dominating in the world of finance and technology and the next generation artificial intelligence applications. So, that's really what it comes down to. If you want to invest in growth, that's where growth is. That's where the growth stocks are. They can be incredibly volatile. They will be very, very high beta names which fluctuate. But if you're investing in growth, you got to have the stomach to weather through those volatile events, because there's a lot of analysis that's been done over the years, right? These kind of gains that you see, 1,000%, 2,000%, 3,000%, don't happen in a straight line. A lot of investors have to sit through a lot of periods of corrections and declines and crashes, right? I mean, not everyone can do that. So if you are sitting on a stock that's up 300, 400, 500%, 1,000%, it says a lot about you as an investor than it does about the performance of the stock. And that's really why it's so commendable, because not everyone can sit through a 70%, 80% drawdown and still feel steady and strong in the face of that correction. And so that's why, people who stick around during the worst times are the ones benefiting during the best times. During the worst times of 2022 bear market, 2018 bear market, 2019 COVID crash, a lot of people quit. And it's kind of sad because, when I go through our surveys, right? So we've got a lot of surveys on the Patreon dashboard, and I go through some of the exit surveys, right? Why did people leave? A lot of them said, I'm no longer investing in the market. A lot of said, I don't want to invest in the stock market anymore. And it's kind of sad for me to read that, because that's one of the best ways you can actually generate wealth. You're investing in your future. And yes, markets are never going to be generous. They're not going to be generous all the time. But when they are, this is what it looks like. Insane gains every day. But we just got to go with the flow. Okay, enough chit chat here. Let's just come back to the comments. Pfizer redestroyed. Thoughts on MicroStrategy. It's going to be very much correlated with Bitcoin. So we got to do an analysis on crypto to better understand where a lot of these crypto stocks are going to be trading at. Is Pfizer an overreaction, Amir? I feel like the guidance cut, we got to really understand to what degree is the guidance cut coming in? Are they really expecting the revenues and the earnings to essentially get cut in half? Or what is the challenges that the company is actually facing right now? And then we can dissect whether this is an overreaction or not. But 39, 40% could, I'm just going to go on a limb and say that this could be an overreaction from the stock market, because that's really what they do is they fire first, they aim later. That's by far one of the ways that Wall Street thinks. They fire first, aim later, because they want to get out of their positions. They want to protect their capital. They want to make the decision first and then think after, analyze after. And that's where the opportunity comes in, where there are inefficiencies. So most of the time, not always, but most of the times, Wall Street tends to overreact to a lot of the news that comes out, whether that's on the upside or the downside. And that's where the money can be made. So, all right. I sold Tesla 425. Should I go in again? Mark says, well, again, the question is, what was the main reason for selling in the first place, right? Was it a trade? Was it an investment? If it was an investment, what was the thesis behind selling that position? If you are looking at buying back again, what's going to be the exit strategy? Why are you buying back again? All those questions need to be answered in order for you to actually make a decision for yourself. Because, of course, we're back at that resistance at 465. Is Tesla undervalued here? No. Is it trading at cheap valuations? No. Is the risk reward fantastic? No. So there's a lot of no's to be buying here. But if your time horizon is long term, we're talking 5+ years, 7+ years, then this could be a bit of a starter position, and then you can start a dollar cost average on those dips and corrections as we see them for Tesla. Stefan, yes, I will get to your message. We'll respond. SPY puts. Depends on your strategy, right? What is it that you're looking to do? If you're just trying to hedge your portfolio a little bit, SPY puts might be a cheaper way to do that. But I'm not a very big proponent on buying options. I do like to hedge my portfolio by selling options more so than buying options. Okay, Joe, I have an Uber 96 call expiring November 7th with a code or 438. Is it on a downtrend or it looks okay? Joe, do you mean like a premium that you received for Uber? 96, yeah, so 96 means you're very close to the money. The code 438. If you can share more about what that code is, does that mean that that's the premium that you received? Because I would assume it is, because it's very at the money call. It's now probably going to be in the money pre-market, trading back up to over 96, but expiring next Friday. So yeah, if you want to keep your shares, the best opportunity here is to roll that option out a little bit to following Friday or the few Fridays out to then see how high you can get up that strike to getting up to $100, $105, $110. That would be the next cost basis. Okay, yeah, cost basis is around 438. It's not going to show me the exact price right now because the markets are not open. But looking at November 7th, we got a $96 call right now sitting at 375. So this one's already going to be in the money when the market opens. So I'm going to assume you sold at 438. It's going to be sitting around $4, 420. So you're going to be just slightly profitable right now, because it's at the money. And then when the buyer essentially plugs in the premium that they've paid, their break even is much higher than $96, right? So their break even is actually going to be over $100 because 96 plus the cost basis is their break even. So until it actually breaches that point, you might be profitable. But if you are trying to avoid assignments, then the better opportunity would be to just kind of roll your option out. Okay, Rakesh, thank you. I'm learning a lot from you. Very good job. Thank you so much. I appreciate that. Bishal, love your content, Karthik. Should we be worried about the stock market growing significantly faster? Yeah, I mean, that is a worry for sure. And I think the biggest worry that people should have is obviously is the S&P 500 growing faster than the earnings? Because when you look at a PE multiple, right? I don't know if I have that spreadsheet. Price to earnings, S&P PE here. Let me just open one of these and see what it is. Okay, so this is just a price to earnings multiple spreadsheet, right? So what we have here is, of course, in the numerator, we've got the price. In the denominator, we have the earnings. And when the price grows faster than the earnings, right? So if it's growing at a faster rate and earnings are, let's say, stable, what happens to the PE multiple? It goes up, right? It goes up because the price is accelerating faster than earnings. If earnings are growing faster than the price, the PE ratio actually comes down. Why? Because the denominator, which is the earnings, is growing faster than the numerator, which is the price. Now, in an ideal situation, what we want is for the price and the earnings to grow together, right, simultaneously in alignment, so that we can actually stay consistent on the multiple, right, the PE multiple. Now, of course, there's no exact science behind what is an appropriate multiple for the market, what is the exact price earnings multiple that S&P 500, for example, should be trading at. Because if you look at 25, right, 1 divided by this number, that's a 4% rate of return. That's really what it is. It's an earnings yield. Price earnings is nothing but an earnings yield, right? What are you getting for earnings yield? But it's not including for the appreciation potential. And so as a result, it could be 20, it could be 15. 15 is looking at a 7% earnings yield. And so the market's becoming extremely cheap. And that's where a lot of investors step in. So if there's a massive correction and we're tomorrow, for example, trading at 15, 16 times earnings, so we're now getting a 7% earnings yield. So that becomes a very lucrative buying opportunity. But if you are looking at 27 and now we're at 4%. So 4%, you can achieve that 4% from a 10-year treasury bond, but the bonds don't appreciate. They are fixed, but the S&P 500 might, right? So it's really, if you were to account, let's say, a 5% appreciation for the S&P 500, and if 4% is the benchmark, then we're really looking at 9%, right, as the total return for the S&P 500. Appreciation plus the earnings yield. So what is the multiple where I would feel very scared for the S&P 500 to get up to? Let's do the math. 35, we're looking at 3%. 40 is going to be closer to, extend that 2.5, 45, 2.2, 50, 2%, right? And even then it's going to be looking at around 6 or 7%. So is there upside? Yes, there is. But at the same time, we're getting very expensive. We're getting more and more premium, right? That's what the market is getting up to, is premium valuations. And so as a result, every investor, every trader has to analyze the risk reward of this market and whether they can get better risk adjusted returns elsewhere, or if S&P 500 is the best game in town still. Do you think ANET has the ability to surprise to the upside? They picked up Oracle as a customer recently and have Meta, Microsoft, and lead customers as well. Arista Networks is a phenomenal company. I really like that, and it's been part of the shopping list as well. Trading at near all-time highs. We got a very strong support at 60, of course, and we've got a resistance right now sitting at around 163, 164. So I remain very bullish and optimistic on Arista Networks over the long term. Are they going to surprise to the upside? Nobody knows. It's going to come down to a prediction, but I remain very, very bullish on ANET. You think MicroStrategy is going to be in the S&P 500 as a future? I mean, as long as they can meet those criterias, sure. But they're also a pretty volatile stock, right? I mean, the beta is going to be very, very high for MicroStrategy because it correlates very much to Bitcoin. So, who are they going to take out? Who are they going to, really just kick out of the S&P 500 and replace MicroStrategy with is a whole discussion. But if they're consistently profitable, they're a large enough company, then yeah, any company can be a part of the S&P 500 as long as they meet those criteria. I joined the channel in preparation for the downtime. Thank you. Look forward to the dip. Perfect. Thank you so much for joining. It's scary how it feels controlled and manipulated lately. A wild year for sure. BITX not performing. Bitcoin is losing. Why do you think so? Is it because of gold? Or I think Bitcoin and Ether are going to go through their cycles. You can see how it's been trading sideways. It's very much in range for a long time. Same as Ether. It's been trading in range. And so as a result, BITX has been a bit of an underperformer. And that's okay. Gives me time to dollar cost average and accumulate for a much bigger move in Bitcoin if and when that happens. So yeah, I mean, we're in this area. Consolidation here, support level 52 down to 44 for BITX. Do you think the Fed cut could be a sell the news event today? It's possible. I mean, we've been pushing higher before the Fed rate cut. It's possible that we see a sell-off after. Andrew, I just want to thank you for always taking the time to read our comments and share your thoughts with us. You're great. Thank you so much, Andrew. I appreciate that very much. Suresh, hi Karthik. Would you recommend opening a separate account for options trading in a broker that doesn't do options and doesn't currently support stock transfers between brokers? Really? Stock transfers either, huh? That's crazy. You should be looking for better brokers. Yeah, I mean, so if anybody wants to trade options, I highly do recommend having a separate options portfolio altogether because it's a lot easier to manage, and it doesn't kind of get mixed up with your long-term positions and kind of removes the temptation altogether. Because a lot of the times I've seen and I've noticed this myself that if you've got a long-term portfolio and your options portfolio in the same place, you're going to mixing and matching all these strategies where you're selling calls on your long-term positions, you're letting your long-term turn into swing trades, and it becomes a bit of a problem, right? So having a buy and hold portfolio long-term, completely separate, it's easier for tax purposes, it's easier for management, it's a lot less activity in there, and you can just buy dollar cost average and hold stocks in that portfolio. And for options, it's all about the itchy fingers, right? Because we know we want to trade, we want to look at opportunities, we want to do something every day to make ourselves feel useful, and that's what the options portfolio is for. But yeah, over the years, I've learned the less you do, the more money you make. Let the markets do their thing. Let the markets do the heavy lifting. All you have to do is just do the homework behind the scenes, execute when the markets are open, and then just sit. Just sit back and let the markets do their thing. Okay, what time does the Fed speak today? So 2:30 p.m. Eastern, I will be live to cover the Fed meeting. Watching breakout about 467 for Tesla is what Dave says. Yeah, Tesla's got a pretty big resistance, right? I mean, it's been struggling here at these levels for quite a while. That is a 467, 470. On Thursday, October 2nd, so beginning of this month, we got rejected at 470. If you come back a little bit, we've got 465 here. And so anything inside this red rectangle is what I also agree is a huge resistance for Tesla. So anything above 470 and we're off to the races. We're all-time highs again. I just hope that it doesn't get up to 500 though. Stays below 500 because I've got a call at 500 and we've got 2 more months left. 2 more months, Tesla. Come on. Stay below 500. Do not get above 500 here. So just making sure I didn't miss any comments here. What do you think about Molina Healthcare stock? Is it worth putting a little in it as the market is tech heavy and booming, Gary? So let's take a look at this stock here. I have no idea what this is. MOH. Okay, looks like it's been selling off aggressively. $8 billion company. We got growing revenues. That's good. Very low margins. We're talking 2 to 3% margins only. And we got earnings, statements, balance sheet's good. We got earnings. Well, 2025 contraction, right? Earnings coming down from $22 to 15. That's a good 30 to 40% drop year on year, and then accelerating back up. I mean, this could be a stock for 2026. Not even 2026. I'd say this could be a stock for 2027, because that's when the earnings growth starts to accelerate once again. Unfortunately, Wall Street will only buy stocks that have incredible growth for that year because they're very short-term, short-sighted. Because of the fact they want to beat the S&P 500, they're only going to be looking at companies with a massive growth in earnings. And some of the biggest, best performers actually represent those characteristics where you've got incredible earnings growth year over year. And they're the ones that are pushing higher aggressively. Companies that are not growing or seeing a bit of a contraction, their charts look something like this where they are struggling. 2027 could be worth looking into. MOH. Yeah, ANET has been one of the most consistent stocks out there for sure. Looking at selling puts at Carvana this week, the premiums are so juicy. Yep. Definitely CSPs are the way to start here. OpenAI deal to make custom chips should be massive for Broadcom for the next 3 to 5 years. I'm starting to lose track of all these deals. I'm starting to actually lose track of how many deals do we already have in place between all these companies. Somebody needs to make a big chart of all the company partnerships that we've seen so far. NVIDIA, Oracle, OpenAI, Microsoft, AMD, Palantir, PayPal. Yeah, I mean, everybody's just kind of shaking hands with each other, and everybody's stock is just at all-time highs, except for PayPal. Even OpenAI cannot save them. PayPal stock has really got to be like, what do I have to do to be pushing up. What do I have to do here? I'm saying all the right things. I'm doing all the right things. What do I got to do to see some momentum here? Oh man, poor PayPal. Okay. Steel, let's discuss the definition of a correction because there was multiple interpretations. I think markets and hedge funds definitely manipulate and try to get a better position. Yes, so corrections anything over 10%, bear markets anything over 20%. Nobody uses PayPal. Believe it or not, I actually use PayPal a lot every month. I'm one of the big contributors of PayPal for their revenues. For the last couple of years, they have charged a lot of fees for international transactions and invoicing and everything. I use PayPal every month, but it just doesn't catch any momentum despite the good revenues and earnings that they keep reporting. If you had a Palantir 125 covered call expiring December 2025, what would you roll it yet again or let it expire when this time comes? I would roll it. So, it's if you can get that capital appreciation even more, getting up to 150, 170 call strike, then that's good. That's good appreciation that you're getting on the stock if you can generate good net credits for depending on how long you roll it out to. Because, I've always said this with options trading, it's like shares are owning a house. That's what you're doing. You own the house. Premiums are the rent that you're collecting each week, each month, and you're also banking on the appreciation of the house. So why would you want to sell the house? You want to keep the house that is appreciating while keep collecting rent. And that's what having shares and generating premiums is all about. You want to keep the stock for as long as possible. That's what I've been doing with NVIDIA, and it looks like I'll be rolling more this week. So, I use PayPal to pay for all my business purchases directly from China. Andrew says, PayPal revenue growth is accelerating. It's only a matter of time. The street rewards it. No wonder they're still around. Caddy, you've been keeping PayPal alive. For real. Because, it was kind of interesting. We only really had a couple options for payment processing. It was either PayPal or Payoneer. Payoneer is also a public company, but they are not anywhere close to as good as PayPal. And so I used them for first couple months, and then got sick of them, and then entirely moved everything to PayPal. And so last couple of years, I've just been using PayPal. But Payoneer is at the same level as PayPal. No performance, nothing. I wouldn't say that I'm keeping them alive, but yeah, I had some interest in PayPal stock doing well. So I was like, you know what? Let me just contribute a little bit, however much in my capacity I can do. But yeah, nothing seems to work, unfortunately, for this stock right now. Maybe long term, but what's the game here? What's the patience game here? We've been here for like 4 years, since 2022, like 3 years, almost 4 years. So, opportunity cost is an interesting thing, because you can make an argument that PayPal in its 5th year can outperform so much that it compensates for the last 4 years, but then the 4 years that we were there in that stock, there was a missed opportunity elsewhere. So yeah, opportunity cost is definitely always very interesting. Anyway, so markets are open, everybody. So good morning. Thank you so much for joining, by the way. We got NVIDIA. First things first, we got to really congratulate everyone who's been in NVIDIA stock for a long time, since the April dip, since the carry trade blow up, since October 24, since March 24, since October 23, since the end of the bear market of 2022. We really have to give a round of applause for NVIDIA here. First ever company to do it. It hasn't updated yet, but we are looking at $5 trillion in market cap for NVIDIA. And there's already articles coming out. AI sets date when NVIDIA stock will hit $10 trillion market cap. So here we go. Huge round of applause, everybody. Congratulations. I definitely want to see some clapping emojis in the comments as NVIDIA approaches this milestone and is now officially trading at a $5 trillion market cap. For the first company to ever do it, Jensen Huang jumping leaps and bounds in the Forbes richest list here, and $208 is where we are for NVIDIA. Incredible. And yeah, this is what the portfolio looks like. New all-time high sitting at 331 for the portfolio, and of course $133,000 in open P&L for NVIDIA as well. 5 clapping emojis. Here we go. Yeah. 6 trillion when? Today? Maybe? No. It's crazy. It has to go up only. So the thing is, every $1 trillion becomes easier. It's always the first trillion. That is the challenging one. Every subsequent trillion becomes easier and easier for NVIDIA. Look at it go. Look at this stock. 210. 210. It's one of the 4%. You know how I always used to say in the past that as companies get bigger and bigger, a 4%, 5% day does not happen very often? NVIDIA is one of those companies that I cannot say that about, because it's one of those companies that has defied all logic, all financial logic, because it just doesn't make any sense. Because you're looking at a $5 trillion company, 5%, is 250 billion. 250 billion. Just think about that for a second. $250 billion of inflows coming in. We don't even have companies worth that much that NVIDIA just gains on a regular Wednesday. So, what are we thinking here? Where are we going to close? 212, 214, 215. Where we go, 210 just broke out. Incredible. Absolutely incredible. I mean, the greatest trade ever was simply NVIDIA. That's it. Nothing else. Nothing else. Maybe throw in some Tesla there, a little bit of SoFi, sprinkle in some Palantir. But NVIDIA, it was just the simplest trade of all time. Did not need to do anything. Just buy and hold NVIDIA. Yeah, it just feels a bit scary too. I agree. I think it does absolutely feels scary given what's going on. And if I show you the heat map, it's going to be even more scary. Because let's take a look. See? This is scary. This is scary. It cannot be more clear than this. The markets are very clear. We don't want nothing to do with anything else. We just want to plow money into one stock. That's it. I mean, Caterpillar's pushing up their reported earnings. AMD is pushing higher, 3%. That's good. Lam Research is higher. Semiconductors, right? SMH, 211. 211. SMH is up another 2%. 370. What an incredible time to be alive. What are we thinking? What are the end of the day predictions here from everybody? I want to know. Is it 210, 211, 212? What are we? 211 is where we are, 5% for NVIDIA now. Wow. 215. What are we thinking, folks? End of the day. End of the day. Are we saying 212, 214, 215, 200, 220? Wildest guesses. I want to see. Depends on the purple time in. True. True. That's very true. Depends on Jay Powell and what he's going to talk about in a few hours. Tesla's struggling. Back down to 460 here. PayPal doing PayPal things. Down over 2.6. We've got QQQ is up 44 basis points. SPY is also very flat right now. let's take a look at NVDL. NVDL, since its inception, launched back in January of 2023, is up 4,000%. 40x. 40x in 2 years. Unbelievable. All right, everyone. Enough euphoria, enough excitement, enough FOMO. Let's come back to reality. So thank you so much for joining, everyone. Really appreciate you all. Drop a like, subscribe, do all the fun stuff. Definitely do check out the link below if you are interested in joining our Discord. We're talking about, all these stocks, trade alerts, members only videos, a lot of engagement every single day. You're going to need it when the markets do eventually correct. We've got a therapy session scheduled for every time the markets get into a bear market. Pfizer V. Today's therapy session is going to be on Pfizer V. Incredible sell-off here. Look at that candle. Just taking down 5 years worth of gains in one candle. So thank you so much for joining, everyone. Happy investing. Link's going to be down below. Additional 30% annual discount available until the end of this month. So 3 more days left. Again, if you have any questions, email me at admin@moneyvest.com. And as always, happy investing, happy trading. I'll see you all in the next